Hi, Michael. How are you?
I'm good. How you doing today?
I'm doing good. I'm working from home.
Hmm.
Well, Michael is a lender that I work with, and I would like to ask him some questions for you, for my clients.
Sure.
Um, Michael, please mm, let me know the people that already had pre-approval. Do they have to do again all the work for asking for a loan?
Yeah, depending on when your client was pre-approved, I would certainly revisit the qualification because we've had a lot of guideline changes right now, depending on the type of loan they were qualified for. Whether or not the loan they qualified for even exists anymore is a huge component. So you want to make sure that you're not taking someone out that was qualified for a mortgage that doesn't exist anymore.
Oh,
Secondly, depending on what the interest rates are when someone qualified, that's a big thing to consider as well. For example, when I qualify your clients, I usually give them about an eighth to a quarter% higher interest rate in my system to allow for a buffer, meaning if interest rates go up, I was prepared for it so that they're qualified still to the price point, and I know that I gave a little wiggle room in case rates went up. But the market's been so volatile that we've seen huge, huge interest rate swings. So, depending on what they're looking for, what their debt ratios were, they should certainly be revisiting it because the interest rate could make or break their entire scenario. And they may have to sit on the sidelines for a little bit and wait for rates to get better.
yeah. How is this affecting to all the people that are working like in, um, you know, I don't know, artists, actors, production, all these
Yeah.
jobs that are stopped,
Entertainment.
entertainment, well, everything, no? Restaurants, people that have restaurants, bars. How is this affecting to these people? Are they going to be able to get a loan? Will they have more access, help? What's
Right.
going to happen?
So a lot of the banks are coming up with revised guidelines to try to ease the verification of income for qualifying, but there will still be some areas that are very tough. The entertainment industry is one because a lot of these people are on complete hiatus right now. Nobody's working. So if their banks are saying we call you self-employed and you're not working at all, they're going to invalidate all the income and they're not going to be able to get a mortgage. But if they can have somebody prove that they're working with what we call a VOE, a verification of employment, that can just
Yes.
vouch that they're working or provide some type of pay stub that's fairly recent to prove they're on a project, then the likelihood of them getting a loan is still there. And for all the other people that are W 2 employees, that are salaried employees or hourly employees, for example, people in the food industry, just because these restaurants are closed doesn't mean they're closed. There are people working, making food, and they are working. So they can still
So
get,
everybody's moving in a slow pace,
yeah,
but the money is moving.
right. And so they can still get a loan. It's just a revised way of looking at their income analysis on our end.
Yes.
And Fannie Mae just came out with that about 24 to 48 hours ago of how they're revising their income analysis. So this is really, really new, how they're
Okay.
asking us to look at it. But it's not impossible. They are trying to work with everybody to make it a little easier to still qualify for a mortgage, whether they're on a purchase or a refinance.
Okay. So the last question I will make is it a good time to buy right now?
This is really important because I know most people are going to say, no way, it's not a good time to buy. But the contrary, it is 100% a good time to buy. Here's why. Interest rates are coming down. Okay. So you're going to be talking about being able to take advantage of really low rates. And there is not a ton of competition at the moment. There is, but not as much as you would normally because of what's going on with a lot of people being in and out of work.
Yeah, because
So
I all think the same, right?
yeah,
Yes.
exactly. We're all in the same boat. So if they have the means to buy something now where the rates are still low or maybe a little bit higher, depending on who they're working with, it's not the end of the world. Because if you think about the bigger picture of what's going to happen in the next 6 months to a year, we're going to have a global recession. Okay. And when that happens, the housing market is usually very stable. Interest rates usually remain very low in a recession. So if people are going to start buying more in the spring and summer, which is traditionally a very busy time for us as
Yeah.
mortgage officers, as realtors, because a lot of people are buying during, vacations, thinking about where they're going to put their kids for school, you're
Mhm.
going to have more competition. And so you're talking about having way more competition during the spring and summer with people that are now able to buy at even cheaper interest rates. Your competition is going to be really fierce. So if you have the ability to do it now, where there's less competition and the rates are, they're getting there, or they might be a little higher, you're going to get in now, take advantage of a market that's a little less competitive. And worst case is you refinance in 6 months on that loan and you lower the
Oh,
interest rates if the rates drop. So the short answer to that is yes, it is still a very good time to buy if you can do it, and I highly recommend it.
okay, Michael. Well, thank you. Thank you so much. I'm thinking about buying a place this year, so I will take advantage of this time
Yeah,
and
for
talk
sure.
about that with you. Thank you so, so much, and stay safe, and let's keep in touch. Thank you.
You got it. You stay safe too. Take care.
Bye.
Bye.